7th edition of the Roundtable. How are things going, Onur?
Pretty good. Hectic, but good.
What are you working on right now? What's the state of the trenches?
I'm working on something very non-trenchy right now. The thing I'm working on right now as a product is actually a platform that aggregates government contracts, or before they're contracts, they're basically opportunities for different categories and areas in the States. And then, we are building a platform that aggregates them and that leverages AI. So it helps you to create proposals for them to win those government contracts. And those government contracts are in the millions, obviously. And just like one anecdotal funny thing is, as I was building the dashboard and I wanted to build some analytics on how US government spends their money, it's like Department of Defense chart explodes, and then all the others are irrelevant underneath.
Yeah,
I'm exaggerating.
They rebranded to the Department of War a few days ago, if I remember correctly.
Yeah,
which is quite hilarious. I don't know what to think about that, but yeah, whatever. I mean, it's been a couple of pretty exciting days in crypto this week. I think lots of stuff going on. On Monday night, European time, we had a little bit of a elevated cortisol level season, very short-lived, where there was that NPM hack where somebody allegedly sent a phishing email to whatever developer was responsible for NPM databases or whatever. Since you're the one with the tech background, can you explain to the normies a little bit what happened there and how big the risks actually have been?
Yeah, I'll start with the impact and kind of the consequences, and then I'll explain the attack in detail. The consequences were very mild. I think overall it was less than $1,000 worth that was compromised, and the attacker were able to steal. Given the scope of the attack and given the potential risk, that is basically nothing. If North Korea would have executed that attack, the damage would have been in the hundreds of millions, if not billions. So I think,
why was the hacker not able to actually extract anything? And
okay, so
why would it be different with Korea?
Yeah, let me tell you what happened. What happened is essentially, you can think of this as follows. As you are signing a transaction, which basically means you are buying something, you are selling something, you're sending something, the compromised package replaced the recipient address. So instead of you sending to your exchange address, you sending to a friend, you sending to pay something, you sending to another wallet of yours, you would essentially send the funds to the attacker. In the supply chain, or in the life cycle of a transaction, there's several different steps. As you wallet software or dApps usually help you to compose a certain transaction. And if they were using the compromised NPM, and NPM stands for Node Packet Manager. Node is just like a development framework for web apps, which are also used in a lot of mobile apps, but mainly web apps. And, you don't build everything from scratch, right? You use existing libraries that help you with a certain thing. There's a few examples, but for example, if you retrieve data from an API, you don't always have to build your own parsers based on the different data serialization formats. You just use a library that does that for you. It's a common problem that's been solved 5,000 times before you. You don't reinvent the wheel there. And if you were using one of these libraries, they were compromised and they were basically injecting the receiver address of the attacker into a transaction. So that's kind of how it worked, how the impact was. Luckily, there was a quick patch, right? So luckily, all the tools that used that named library, that NPM package, they were able to quickly patch such that the impact was minimal. Now, what type of attack is this? This is called a supply chain attack. And you basically compromise a piece in the supply chain, which then makes its way into a deployed dApp or into an existing wallet, and then is able to cook. Now, mitigation strategies here. I think there's a couple there's a couple ways how you could have mitigated that. One is just read the last confirmation step in the transaction. Like, if you were able, that's my understanding. If you were able to read the last step that shows like some way cryptic the transaction that you're about to sign and confirm, you would have seen that the address you're sending to is not the one you intended to send to. So that's kind of like just like going through. And here's the crazy part. They were able to generate receiver addresses ad hoc that looked similar to the one you tried to send to. So they basically created vanity addresses that looked similar to yours on the fly. And that is the scary part. So checking
That's what they did with the Bybit hack a few months ago, right? Where they had an address that looked very similar at the beginning and at the end, and none of the multi-sig signers confirmed the entire address.
Exactly.
Right?
So what you have to do, even as a multi-sig signer, is, especially for large amounts like that, you have to verify every single character. Every single character, not the first four and the last four. And, you know, if you're sending 1 billion, I mean, come on, like, that's fine. Like, take your time and verify every single character. If you're sending $100, up to your discretion. If you're sending like a few thousand, I would probably also still check every single character. Now, the thing is, like, the impact is minimal. I mean, nothing essentially happened, right? But the consequences could have been much, much more severe, because while you as a user only interact with a compiled version of code, which does exactly this, it replaces the receiver address, the developers who are working with the raw version of the library on their machine could have been completely wrecked if they would have executed the attack in a fashion of I don't know the exact word, but basically like remote machine takeover style, which basically means they get access to your machine, they scan the file system for secrets, for keys, they immediately copy whatever is in your clipboard. So if you have like a mnemonic or a private key in your clipboard, it calls home, it calls host, and sends all that data home, and your keys are compromised, right? So there's different levels of attacks. So most people care about key hygiene, and just like making sure their keys don't get compromised, and that is important, and that is obviously like a big part of the equation. But I would argue that in practice, most attacks actually happen during signing. So your key is never really exposed until you do something stupid and you copy it into your clipboard while being online and using a bunch of different tools. So
that's something. I mean, I'm using quite a few hot wallets, probably more than I should for everyday transactions. But like, I would never even have the idea of copy pasting this thing to my clipboard.
I mean, one thing you can do is you can disable all network connections. No, I'm not going to give advice, and then people are going to say, no, that doesn't work, blah, blah, blah. Yes, it's best to never copy it, because like,
I mean, even if you just look at like Google Chrome extensions, how many of these things have access to your clipboard? Like, dude, it's insane.
So what honestly, it is very, very, very painful, but the best advice I can give is use dedicated hardware for crypto signing. And don't do anything else there. Don't use social media. Don't click links. Don't download Chrome extensions or any other software. Just use the vanilla OS, ideally a POSIX system, not a Windows system, and keep the distribution up to date at all times. Do all the security patches. Do all the updates. and just use it for like crypto transactions and signing, and then like immediately log off after. Never copy any keys. Um, you can use offline signing like a hardware wallet. You can use a multi-sig. I personally am a fan of multi-sigs, like a Gnosis Safe, because you know signing is signing, right? But if you have to sign with multiple keys, I mean, by default, you're being exposed to the transactions multiple times. So maybe you miss it once, but with the second key, maybe you catch it. Or if you use a different wallet app on your phone that you sign with as the second signer, maybe it's being presented to you in a different form. So I would generally say like using something like a multi-sig, like a Gnosis Safe, is probably the best trade-off for most people. But there's no silver bullet, because the compromise is always security versus convenience. If you're an active trader, if you're farming yield, if you are trading back and forth, if you do your stablecoin thing, you don't want to do 5 transactions out of 7 every time and do like get your ledger out and do that 500 times a month. You know what I mean? Like that's not really usable. Everyone knows that. So I think there has to be a compromise in the sense of like use a wallet setup that enables you to transact within a few minutes without having to access cold storage wallets. But that still gives you high security because of multiple signers and because of those signers being heterogeneous. So you don't have like a 12-word mnemonic phantom wallet for these 5 signers and they're all on the same machine. That doesn't make sense. One is on your main machine, one is on your phone, one is on your laptop, maybe one is on another device, or 2 are on your host machine and one is on your phone, one is on another. Like if you think about it that way, it's pretty okay for like a hot wallet setup. In no scenario would I use just an EOA, like just like a single key securing a single address, because that's going to be cooked if you get compromised. Like if you click a wrong link, and usually that's how it goes. Like people want to do an AMA with you, people want to do a podcast with you. Everything looks legitimate. On that, for some reason Google doesn't work, X Spaces doesn't work, and they send you a Zoom link. But guess what? That's not a real Zoom link. That's a Zoom link that's able to take over your machine, scan your file system, communicate with home with another host, and send all
I've
your.
even heard of instances where it is a Zoom link, but they are able to like send some
Fake Zoom
extension
link.
or some virus through that Zoom meeting. Then, like it's
No, it's not
insane.
the actual. It's not an actual Zoom link. It is a fake Zoom link. I think you're referring to Microsoft Teams. I think Microsoft Teams, like there was a user who had Microsoft Teams compromised or something. It was a Windows machine. I'm not too familiar with that, but just to summarize, like most people worry about keys, and that's good. But I would say the biggest danger is during signing. So even if no one has your keys, but you signed the wrong thing because of some injection, you're fucked. You're cooked. And you have to always verify what you're signing, even if you have your keys under control and you have good key hygiene.
I think Rabby Wallet has at least a decent UI for that, where
Yes.
it at least flags it whenever you sign with something that has like a low popularity or you've never transacted with it before. So if you think you are on any crypto D app or interacting with any address that you assume you've been interacted with before, but it's actually been switched around, it at least will flag it. So, but yeah, I agree. It's still ways to go to make it mass friendly. Like on that note, that incident on Monday really made me reconsider like how vulnerable people are if such an attack is successful on a system, on an infrastructure that is by design immutable. Like it really increases these tail risks of technical exploitation. Versus if you compare it to a bank, I mean, yes, banks lose millions and hundreds of millions every year due to fraud, whatever. But I mean, in theory, first of all, you're kind of deposit protected in some countries up to a certain amount. And other than that, since it's like it is at their discretion to change the ledger. Like it is really hard unless you steal physical cash from the bank or you're able to get like a fraudulent check cleared to just take money out of somebody else's account. Like they own the ledger. and with crypto, like it would undermine the entire premise of this new financial infrastructure if transactions or like blocks were to be reverted. Even though I am pretty confident that if we ever see like a multi-billion hack that affects several thousand or maybe hundred thousands or maybe even millions of users, it is very likely that certain chains will get reverted. Maybe not like Bitcoin or ETH layer one, but especially on the L2 space or like some dedicated chains that are more or less dominated by a single application. Think about Hyperliquid. Think about Polymarket on Polygon. Like I would be very surprised if these things wouldn't get reverted in case there was some monumental
So
exploit.
that already happened, and it was called the DAO hack, and it's the exact reason why Ethereum and Ethereum Classic exists. Because Ethereum Classic, I mean, the DAO hack was obviously there's supposed to be this decentralized venture fund, which was called the DAO. They collected millions. They got hacked. There were two groups of people. The first group were code is law. We're building these systems to be resilient exactly against censorship. So who are we to play God now and censor? And then there was the second group, which was basically, come on, guys, like common sense. This is bad. This is crime. This is illegal. Let's fix it. And in my opinion, it was the tipping point for crypto in a positive sense because people realized, oh, this is not just a thing for criminals. There's actually people behind these systems that can make decisions, take responsibility, and fix things if things go wrong. And as much as my cypher punk heart wants to live and die by the code is law narrative,
Live and die by code.
live and die exactly. I actually think common sense makes sense. You know, like if you observe an illegal activity by a malicious actor, policing is okay. Like you can police that, you can fix that, you can take measures that are drastic to impact the outcome of the situation. So, you know, in a perfect world, it shouldn't be the case, but I'm with you. I think it will happen, and I think things will be rewarded. And you're right, like Bitcoin, it will never happen. Something like Monero, it will never happen. But anything that has like a strong centralized entity behind it, and Hyperliquid, I think, is the prime example here. 100% they would reward, and they
Also
would
Base,
fix
for
it.
example. I mean, especially if it has these TradFi adjacent integrations or a lot of fintechs interacting on that and kind of a more normie crowd. I don't think it makes sense game theoretically to be completely reluctant to reverting transactions or blocks if some really outlier event happens. However, like it would be naive to also assume that this wouldn't lead to a slippery slope downstream. Like that would definitely undermine the perceived integrity of crypto as a whole. I think the DAO hack is somewhat different, and funnily enough, there was a 10-year ETH anniversary event like a month or a month and a half ago in Berlin where Christopher Jensch spoke, who was also witnessing the DAO hack back then. So it was quite interesting to hear from somebody who was
Yeah.
there first person. But
He has like 8 kids. He's cool.
lots of Sybil wallets to set up.
Exactly. No, he's an OG. He was sitting with Yuta, Vitalik, Gav in the same room, and I think he was doing QA at the time. If I'm not mistaken, he's working on securities on chain and like equity shares on
Tokenize it.
tokenize it exactly. I mean, he's an OG. He's like very cool guy. And he was there. I mean, he's not wrong.
Yeah, and I think that also like going forward, it's to assume that we live in this. Everybody is aligned to do good based on their own incentives, etc. Like this vanilla libertarian and ANCAP worldview, like it will never come to fruition in its entirety. Like there will always be a time and space to intervene with like force of whatever kind is necessary.
It's
And
not
I think
mutually
like on
exclusive.
chain is the same thing.
It's not mutually exclusive, in my opinion. So I think the people that want to live and die by that, they can use Monero, they can use Bitcoin, and they literally don't give a single f about any L2, about any centralized chain, about any foundation. They use Bitcoin and Monero, and that's all. And I think the dark market potential for that has at least 1,000x in it. It's a
You mean
trillion
for
dollar.
Monero?
Yeah, I think it's a $1 trillion market. Monero is currently trading at what, like 4 billion or something. So that would be my bet. I mean, my bet would be on one of these like privacy chains for that side of the market, that where no single person, foundation, or group of like elitist mob will ever be able to touch the chain and revert stuff. I mean, I'm saying that as if it's God given. Obviously, there's mining pools, and if you control a certain percentage on the mining pool, that
Oh yeah, there was
does.
an incident on Monero with this
I
Cubic
didn't
pool a few
I
weeks
didn't
ago.
follow it too closely, but apparently there's an actor who has gained control over more than 50% of the mining pool. It's not trivial logistically to perform an attack, though, as hash rate or like computation power can quickly be directed in other places, and in the end, the heaviest chain is the canonical legitimate chain, right? So the second you see, I mean, it would need to be something like they build a malicious chain, which is heavier and longer in secret, and then they expose it and broadcast it such that a giant reorg is happening, and it's going to be impossible to undo that reorg, because otherwise, the second they do something malicious, within a few minutes to hours, people can revert that by building a heavier chain. It's just a huge logistical pain point, right? And what would happen is all exchanges, and funny enough, most exchanges already delisted Monero because it's a privacy coin. But like the only decentralized places left, like Thorchain or Shapeshift, there's a few others. Yes, I mean some amount of money would probably be gone through these systems, but in general, I think it's very unlikely. But famous last words. I don't know. It could happen.
Yeah. Do you see any other like competitor to Monero that is still relevant? I mean, there's Zcash and I think like Dash that have been around in the 2017 cycle a
That
bit.
Dash was never a competitor. Dash was always a meme. That the Dash community will hate me for it, but Dash never had the tech to legitimately compete with Zcash or Monero. Now, the big problem with Zcash, in my opinion, is that they have the two transaction model, the shielded and the public, as well as a centralized foundation, Electric Fund. I think that they now rebranded to Zcash Foundation. So the problem is like there's an address and there's a president of the foundation. People can go there and ask them to do things, right? So while they're not in sole control of shutting down the chain, it's a problem. It's not a feature. Try contacting anyone from Monero. Like, good luck. I mean,
Mm.
it's impossible. Like, who do you want to point to and blame if anything happens there? It's like so decentralized. And funny enough, like in my friends group, the people that use Monero are the most cyberpunk Berkheim type of people I know. So pretty based. I think Monero is pretty based. I don't think there's any competitor that comes close. I think the privacy wars are over. There was Penumbra by Henry, which was a Cosmos chain. I think their tech was amazing, but their go-to-market, in my opinion, didn't go as planned. I don't want to say failed, but in the end, it didn't really succeed. And
Were they the ones who shut down a few days ago?
yeah, they decentralized. Now it's in the hands of the community.
Do you think, like, on that note, especially because in the Cosmos ecosystem there are several instances of abandoned projects or stuff being shut down or just like, yeah, left on the side of a road. Um, do you think that there will be some large, well-capitalized actor that is just going to scoop up some of these things at a discount, like either through buying up 51% of these tokens or otherwise trying to kind of CTO the thing and just revive it? I mean, it's like, because one thing, I mean, in the TradFi world, even if you are an insolvent company, like, you usually have book value that you can like sell off for at least a couple of cents on the dollar. Whereas with crypto, because you don't, since a lot of the stuff is open source, you don't even really have any IP rights to anything. So in theory, if you believe in the tech and you just think in the case of Penumbra, okay, like, we can do go to market and growth, which they failed doing, and we maybe are only a quarter as good on the tech side, but they already built it. Like, why not just take it over? Do you think there's going to be
No,
a trend of that stuff?
no, definitely no. Like you are, you don't have full control over the supply. You're basically CTOing. You everyone wants to start fresh with token distribution and do it right. There's a bunch of token holders who, Yuri, I think you can you mute yourself. Um, um, you have a bunch of like token holders who have nothing to do with the project anymore. They're not relevant for the success of the project. You may pay for security for validators, so the token is inflating, as opposed to just fork the GitHub repo and just launch a fresh thing where you control everything and where you can do your own airdrop. You can build hype. You can build maybe a point system towards like your token generation event. I don't know, like whatever makes sense for you. Like forking the tech is fine. CTOing a chain to me doesn't make sense. It's not like a meme coin with a fixed supply where you buy it at 2K market cap, you own 50% of the supply, you drive it up to $1 million market cap, and you cash out like 80, 100K. That's not how it works. It's much more complex and has many more moving parts. I don't think that's a thing. I don't think there's a bull case for doing that.
Yuri, what's the state of the trenches on your side?
Can you hear me well? I'm about to also switch my headphones in a bit. They're just charging up a little bit. Everything has been a little bit hectic today. I want to apologize for that. But the trenches are looking well. We have been very busy with the Union launch that took place very, very recently. So I was very focused on that. It was also nice to finally see Union launching, since I had expected the launch for a very long time now as an old Cosmos guy, as you all know. So yeah, it was nice to see Union finally launching, one of my favorite teams in all of crypto. And then we had also Somnia launching. So we had like two mainnet launches following each other in a very short period of time. However, I was much more focused on Union. Have you guys followed the launch closely as well?
Not at all. Could you give the TLDR of what Union is building? So what I understood is it's another bridge in the Cosmos ecosystem right now. So like, how is it different from like XLR or just like using IBC natively? Like, how does it work? How is it different? Why is it needed?
Yeah, sure. The TLDR is very quickly is Union extends the capabilities of IBC. This is how I would frame it. So Union itself is a blockchain. Cosmos SDK very vanilla, and it has its own validator set, and the validators do nothing different than validating and coordinating the different cross-chain transactions that come into onto the chain. And the thesis of Union is to become the default layer for cross-chain transactions. And it's very interesting because if you look at the team from Union, lots of them also have been working on Picasso network before. This is like something that a lot of Cosmos OGs are still familiar with. And I remember talking to
I still
Granger.
have
He
the
said, yeah.
Picasso merge from Cosmoverse 2022.
Oh, really?
Yeah.
Amazing. Yeah.
Maybe
No,
maybe
these
one
were
day
times.
these like rare merge pieces will be worth more than the entire token supply of these old projects.
Okay, I see. Yeah, but I was talking to their CEO Branger back then, and he said that bringing IBC to other ecosystems is just a pain in the ass. To be quite honest here, and he said that especially governance proposals and all of these things are super complex. So what Union does is it works with ZK proofs and therefore brings IBC capabilities to these chains. So they are like smart contracts with ZK capabilities embedded on these chains. And this is how the magic source works, so to say. And this is how Union has it much easier to bring IBC to all sorts of blockchains, including Solana, including Bitcoin. For example, Babylon, they already bridged a significant amount of volume from to Babylon. So this has been very exciting so far. And so Union is basically bringing IBC's capabilities to everywhere. And the thesis for the token is that validators obviously need to stake Union in order to coordinate all of these transactions. You need to pay a certain fee in Union tokens. So the more cross-chain transactions are being executed via Union, the more demand there will be for the U token. So it's like a classic infra project. But I'm a Cosmos kid, so whenever there's like something about interoperability, it always catches my attention. And long-awaited launch. So let's see how it plays out. A lot of people have been a little bit disappointed, unfortunately, with how the token has performed since Union launched a lot of money. They launched 12 million alone in this Series A. Now I think the market cap is at 18 million. FTV is, I think, slightly below 200. So people had like higher expectations. But other than that, I think, very bullish on the product. That's for sure.
Are you guys coming to Cosmoverse, by the way?
No.
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 Yeah. Seems like a somewhat dead ecosystem. Like I'm always happy for the stuff to like launch and things, because it's, I mean, at the end of the day, it's useful tech, etc. But it's just like, yeah, it's so exemplary of messing up go-to-market and just like appealing to a broad user base.
Honestly, if I would work in Cosmos, I would go. But I'm not anymore, so that's why I don't go. But it's
Abandoned for ship in time.
I obviously, as always, like it's about the friends we make along the way. And I highly appreciate the people I met there, including you guys, but also a few other people. I think it is an amazing ecosystem with amazing people. I just think the design is cooked. I just think that like there's a curse almost. Like I was too blind to see that there are higher leverage markets for me to work in, getting the same amount of everything, like money, recognition, joy, building knowledge in other ecosystems. And yeah, like Cosmos is almost like Berlin, you know, like have fun staying poor. It's like cool, but poor.
Was it actually cool?
Coded.
I think Cosmos is cool. I like Cosmos. Like, if anyone says bad things about Cosmos, I'd be like, come on, like, it was a good ecosystem with good people. Yeah, I think it was fine.
Yeah.
Maybe pivoting topics a little bit, away to the stuff that is a little more, let's say, in touch with the end user base. So right now there's a pretty big, attention on Hyperliquid and the USDH stablecoin ticker. So there are several proposals in the pipeline from different providers and issuers to get that ticker. So to give a TLDR of that, right now, USDC Circle stablecoin is the kind of canonical stable on Hyperliquid, and there's about 5 billion on there. I think that is roughly 10% of the total outstanding supply of USDC. And obviously, Circle is cashing in on the revenues generated from the treasury bills. And I mean, we've seen it in the past with Coinbase, where Circle had to do, I think it's a 50% revenue share for all the USDC sitting on Coinbase that they have to give to Coinbase for that. And I think Hyperliquid is now thinking the same. So why miss out on this potential 200 million annualized revenue if you consider it's a 4% rate right now? So 5 billion in supply roughly translates into 200 million in dollars in revenue every single year. So right now we have a native stable that's like a Hyperliquid native project. There's also Ethena that entered the arena, Paxos, Frax also, Agora, and like one or two others. And it's pretty interesting because many of them are willing to give up 95 to 100% of their revenue just to become the canonical stablecoin on Hyperliquid. So the way it would work is that they use all the revenue, or like 95 or 90% or whatever they proposed in every respective proposal, to just either buy back the Hype token or contribute it to the Hyperliquid Assistance Fund. And yeah, I mean, obviously that's pretty bullish, the Hyperliquid token. And yeah, it's interesting to see just how, like, in some verticals in crypto, people are willing to forgo such insane amounts of revenue, and like be willing to bear costs just to finally get a little bit of distribution. I think we've seen similar dynamics in other instances in the past. For example, with the Robinhood chain, before they built their own chain to launch on Arbitrum. Like before that, like 4 years ago, it was always, oh, you have to pay us to use our tech. Like that was the entire idea behind Polkadot's parachain auctions, where we had like, you basically had to put up in the tens of millions to become a parachain. And now chains
how
are
did this
paying
go?
and now chains are paying tens of billions for like somebody to come on them and like use their tech. So like it's overall quite an interesting dynamic right now. If you look at Polymarket, it looks like Native Markets is going to win the proposal. It has a 78% odds and is followed by Paxos with 19%, and Ethena at 4%, Sky, so that is Maker, at 1%, and Frax and Agora are basically below 1%. So it's like, yeah, pretty interesting how people are competing in and around Hyperliquid. It really seems to have become the behemoth of like the DeFi chain this cycle. So kind of what, like, you know, Injective walked so Hyperliquid could run. If we look back at last cycle, I really think that they have been the ones who've like eaten the biggest cake. Also in terms of like, yeah, just intra competition within in crypto, everybody wants to get distribution on there. If you look at points farming right now, it's mostly centered around projects on the Hyper EVM. So in my opinion, Hyperliquid, Ethena, and Pendle are like the three big winners of DeFi and crypto finance at large. There could be a thesis to long Hype and short Circle right now, but I mean, Hype has already appreciated in price quite a bit. We are just sitting at all-time highs, so we reached all-time highs earlier today at $55, and now we are sitting at 54. And Circle has already declined, I think, by 60 or 70% from its all-time highs. Like a few weeks ago, I was thinking about putting on a pair trade that would be long Coinbase, short Circle, because very briefly after the Circle IPO, we saw a huge run up in the Circle stock, and Coinbase was kind of lagging behind, even though Coinbase was forming about 50% of Circle's revenues and overall has a much more robust and diversified business model. And like looking out into the near future, Coinbase is likely going to profit from rate cuts because that creates more appetite for risk assets and like higher trading volumes, etc. And Circle is going to suffer from that because their only way to generate revenue is by holding US treasuries. And if the yields of these things go down, obviously their revenue and profitability goes down. But yeah, I mean, looking at the price action of both of these assets, Hyperliquid and Circle, over the last weeks, I think this trade has sort of left the station. So I would be very uncomfortable putting this on right now, even though I think directionally you like the thesis behind it is still correct. Are you guys active on Hyperliquid at all?
No, not at all, to be honest.
Just staking hype.
Yeah. But you said something super interesting, actually. Sorry, I'm just getting called by my dad. Just something super interesting, actually. What you just mentioned is the distribution part with that every stablecoin is willing to give up huge percentages, and I think this is like a very obvious sign where the industry is at. It's like distribution is more expensive than ever. What do you guys think of that?
In crypto or in general?
In crypto.
I mean, it depends what you're looking at. I think right now it seems very expensive because the internally successful projects in crypto just have huge treasuries. I mean, think about Hyperliquid and think about Pump.Fun. These are both sitting on billions of dollars worth on cash treasuries. So in theory, they are able to basically put up an infinite bid for getting more distribution. So I think that raises the perceived price. I think other than that, the vehicles that have gained a lot of distribution, namely Ethena and Pendle, over the last months, they have not necessarily directly paid anything for that. Of course, you sometimes have like ref share, similarly structured agreements or incentives there. But other than that, especially if you look at Pendle and Ethena, these two things are super mutually beneficial. Like, I think more than half of Pendle's TVL is USDE. And I mean, if you look at Ethena's TVL, also a significant percentage is driven by Pendle PT and YT speculation. So I think these things just very well add on top of each other. So you don't really have to pay for distribution there. In terms of centralized exchanges paying for distribution, I think last cycle we saw way more outrageous moves, like FTX and I think like crypto.com acquiring these $200 million arenas and like putting their logo on top of that, and like every crypto exchange sponsoring a Formula One team. So I think on that side, it's declined a little bit. I mean, not saying that it couldn't come back, but it kind of feels like yeah, there's still a little more room to run. But on the very crypto native side of things, yeah, I mean, at least the awareness for distribution has grown. Also, probably because VC money is not flowing as easily anymore as it did in 2021 and 2022. So like, it's harder to justify, or like, yeah, we'll make revenues in a few years. Let's just build out the tech first, and the distribution comes later. Like, no, you kind of have to see more product market fit to gain any traction in crypto right now. So, what do you think?
I think really resonates with me what you were just saying. There was like so much VC money in 2021, and back then, like the user acquisition, like the price per user to acquire was a little bit irrelevant because there was just so much money on the market. So whatever, and also the users, most of them had like deeper pockets. But I think we are really what we have discussed. I think it was last episode where we talked about that a lot of users really burned their fingers and are so afraid to return to the industry. So the amount of retail users is so much smaller than compared to before, and the only like big users entering now are institutions, and they approach the industry completely different compared to the normal user. So I think this is actually the reason why it's so expensive right now to acquire a user base and to foster on-chain growth, because yeah, I think the concentration of potential users is so much more constrained, And I think a lot of things have to change until we see like more and more people returning to the industry. I think this is also why the cycle felt so much differently compared to the others. People experienced all of this rodeo like 2 or 3 times already. I think that was like and not much innovation happened compared to the previous cycle, to be very honest. Like on the tech side, on the infrastructure side, maybe. But a lot of people returned in 2021 because all of a sudden NFTs were like melting faces, and especially DeFi, of course. And this wasn't the case in 2017. I don't know, was there like something that you were able to use in 2024, like in this cycle, compared to that wasn't around in 2021? Maybe Pump.fun?
I think in terms of UX improvements, we made a lot of ground over the last couple of years. I think in terms of like, bridging infrastructure, liquidity, etc., we definitely made progress there. I mean, in 2025, I'm not really sure if anything completely new launched, like 0 to 1 unlocks, but in 2024, definitely. I mean, Hyperliquid started growing, Polymarket started growing, Ethena launched in 2024, Pendle became big in 2024. So I think in 2024, we actually saw quite a bit of evolution, both in the token lifecycle, token creation space with Pump, but also kind of the speculation infrastructure and vehicles where you can transfer risk and transfer time preferences, which are like the two base use cases of finance, which you can now do with Pendle, and like these vehicles tapping into sort of farming willingness to pay for speculation. That's basically Ethena profiting off of funding rates. Pendle also like the PT yields being subsidized by point farmers. So I think on that side we made quite a bit of progress. I mean, of course, last cycle was a little more unhinged, and I think especially if you look at DeFi, for example, I think this year is the first time we've sort of been able to exceed the appetite and interest in DeFi for the first time since right before the Luna ecosystem collapsed. Because if you look at 3 years ago, for that timing, for that era, the Terra DeFi ecosystem was amazing. Like they had with Mirror Protocol, they had tokenized stocks, they had what was that UST yield thing called that they subsidized with that Ponzi-esque whatever thing. Like you had these financial paradigms, which of course were not financially and mathematically sound. That's why they collapsed, but they were there and they had users. And I think now is the first time we've exceeded that. On the tech side of things, I think Owner can judge that much better than us two. Looking at the progress between last cycle and this one, probably a lot of stuff on the layer 2 side, just being able to like scaling block space, tapping into block space, the whole roll-up infrastructure with projects like Celestia, more L2s being around, not having to pay $100-$200 gas fees on ETH layer 1 anymore. I'm personally very happy that this era is over. So yeah, I do think we've made some ground there, but yeah, of course, still long path to go.
I mean, you can summarize them as UX improvements. I think this cycle, for the first time, like one differentiator of this cycle compared to last cycles is I'm seeing much more mobile apps. And the experience of those mobile apps is amazing. I mean, regardless of what you think about it, the Pump.fun app is insane. It's such a high quality app. The UX is incredible. It's quick, like it's snappy, it's fast, it looks good. And that didn't exist last cycle. Like that type of experience. I think Moonshot is another one, right? Like those type of experiences for retail didn't exist last cycle. So regardless of like block space or performance conversations, which to be quite frank, I got pretty bored of. That doesn't interest me. I haven't been following those. I think UX improvements, like at the end of the day, all those things, whether it's execution quality, speed, getting a better price, like better quotes from aggregators, it all comes down to UX improvements.
maybe on the note of Pump.fun, since you just mentioned it, do you think we are at the brink of a meme revival, or like how are we? What's the health of the trenches right now over there on Solana?
I mean, especially today, I think it's very good. It changes daily. That's the thing with the trenches. It's like it's almost like in war. Like any macro move can change the whole situation based on a daily basis. But right now, the sentiment is quite positive. I mean, on the one hand, we have Elon pushing creator capital markets and all the streamer coins. Gainsey is streaming. Mitch started streaming, which I think hit $40 million market cap. Now it's back at 8 or something. Like there's the whole like streaming content creation meta, which I mean, I really don't know how this meta will play out. I'm not too bullish on it, but the one thing that is undeniably true is new streamers on Pump make orders of magnitude more money than on Twitch. That's just the reality. And maybe it's not meritocratic. Maybe it's just sheer speculation and it will not be sustainable. That's perfectly fine. But you need a couple days, weeks, probably, to make your first $100 on Twitch. On Pump, you need like what, an hour, maybe half an hour, couple minutes, 2 hours max. So it is interesting, I think, for creators. And then most other launch pads or metas I don't really see. There's an interesting goon tech meta going on right now on Pump. OnlyFans models started to create coins and stream, and those coins hit insane market caps. I haven't been following too closely, to be honest with you. I didn't trade any of those tokens, but I saw it happening.
You're not watching Not Safe for Work Pump streams on company time?
No, that I do, but no, of course not. It was so funny. Like a friend of mine shilled me a coin, and he was like, "Hey, like, have you seen this coin?" And I'm like, "No, what is it?" And then the second hint he gave me. Wait, let me pull up the chat. The second hint he gave me was I'm trying to find it. It's that and that narrative. Like, I don't know, like Trump narrative or peanut narrative. No idea what you're talking about. And then he's like, dude, fake taxi. And I'm like, okay. So it's so funny. Like there's these weird narratives happening on Pump, which I have no idea where they come from. But I summarize that as goon tech. So there's like goon tech happening. Generally, I think like good communities that survive are thriving. Like honestly, like I'm not really actively trading in the trenches. It's just too time consuming. But I have a watch list of communities. For me, it's just like communities, right? Like however they may be priced and however they may be mispriced. I just looked at like the things that they do and the stuff that they produce and the way they use the creator rewards and whether we see some of this materialized in the real world. Usually the communities that have the most fun and are the loudest do the best. So yeah, I think the trenches are pretty hot right now. I mean, the one thing is like, it seems to be a rotator meta though. It seems to be like rotating from the new hot thing to the new hot thing. If you're just early enough before like the herd is probably working the best, and that is 100% not what I'm doing, and I don't have the time to do that. But
yeah, I think I'm pretty down bad on like all of my meme coin exposure from like end of last year, probably except for SPX and Unstable Coin. These are the only ones I've been.
Unstable Coin didn't exist last year.
Yeah, that's a newer one, but like all the old ones are just like down. Yeah, that's I mean, I'm pretty excited for the Solana DATs coming up in the next weeks. That's probably going to happen somewhat simultaneously to the Sol ETF approvals. Kyle Samani, the multi-coin dude, he's about to chairman a 1.5 billion Solana DAT, and allegedly they're just going to yeet the entire 1.5 billion straight into the Sol chart. So that could propel some upwards price action on the DeFi front. Solana also seems to, at least maybe not on the foundation level, but at least the DeFi projects in Solana are trying to compete more with established DeFi in the Ethereum and EVM ecosystem. And I do think that is very necessary to just like have the like basic paradigms all right in order to thrive mid to long term as an ecosystem. And there are decent DeFi applications on there. So Jupiter now has Jupiter Lend in collaboration with Fluid that launched, I think, a week or 2 weeks ago. Then you have JLP, so the Jupiter liquidity pool that is still doing surprisingly well, even though like I have never met a single person who's trading on like Jupiter perps. It's still sitting at like 1.5, 1.6 or whatever, maybe even $2 billion in TVL, which is pretty insane. I mean, the yields are decent. And if you just want like an index exposure, so JLP is composed of, I think, around roughly 2/3 in directional exposure. So that is mostly Sol, little bit of ETH and a bit of BTC, and then around 1/3 in USDC stablecoins. So like you kind of get a muted directional exposure plus whatever is generated from trading fees on Jupiter. And I do think there's also a component of like trader P&L similar to HLP on Hyperliquid. And just like a lot of large DeFi users I know, if they have been doing just one thing on Solana ever, it's usually being exposed to JLP because it gives you a very decent index exposure and just like collecting some additional yield on top. And I mean, Meteora on the LPing side is quite more interesting to play around with than like most of the other typical concentrated liquidity pool applications, because on Meteora you can play around with like different fee tiers and like all of these liquidity buckets and whatever. So there's quite an active community there too. Of course, it doesn't really like match the trading volume and just like the default usage of Uniswap on most of the EVM chains and maybe Aerodrome on Base, but still worth paying attention to. So
they also announced their point system. So season 1 is over. They announced season 2, and that will be relevant for the Meteora airdrop. And I think it's a nice way to amplify LP rewards. I think the rough math they're doing is like plus 25% on whatever yield you're making.
Yeah, I think I should LP more stuff on Solana because like especially these older meme coins, like it doesn't make sense to just hold them directionally long. I think it always makes sense to pair them against Sol. I mean, that's what they're mostly being traded against, the larger ones. I mean, first of all, they're somewhat correlated anyway, so you can play around with tighter ranges and kind of, be a little bit more aware of impermanent loss and mitigate that more than if you were just pairing them against a stable coin. Yeah, and like you get some extra yield on top, and like there's no reason to, I mean, you don't really have any other yield vehicles or airdrop vehicles for just holding meme coins. Yeah. By the way, did you guys order the Solana Seeker phone?
No, I mean, the idea of ordering a crypto phone is just wild to me. Like, it's such a target, such a honeypot. I don't need that. Like, I'm happy with the apps I need on regular phones that I use. But it's interesting.
Yeah, I'm surprised that you didn't order one because like out of all three of us, you're by far like the most intense Solana ecosystem enjoyer.
But the thing is, it's a new, unbattle tested system. It doesn't solve a problem I have. Like every problem I have, I solved. And I just gave the best example. Like the quality of the apps on iOS and Android, at least, is so high this cycle. I personally think highly of the security architecture of iOS and iPhones. I think iPhones are very secure devices. I think they're battle tested. They probably have backdoors, but I take that into account.
Just be
Versus, yeah, versus a new thing which looks interesting, but like the first generation will have so many flaws. The second generation may be fine. You know what I mean? Like hardware is a different game. Like hardware, you never buy the first generation. The first generation always sucks. So I'd rather just like wait it out and see what the feedback is. If the feedback is good, I can still like order some afterwards. But I don't think it will be amazing. I think it will be typical first generation issues.
I ordered one and got it delivered a few days ago, so I have yet to unpack it. But like, I mean, first of all, I think it almost paid for itself through the meme coin airdrops that like you received in between with the wallet that you registered with. I'm not sure if I was able to recoup the full price, but I think it cost like $450 and then maybe like another $100 for like taxes and shipping, like the import duty fees. And probably like the meme coins you received for it were worth like 300 or whatever if you sold them right away. um and yeah, like I've never used DeFi or crypto actively on my phone except for some centralized exchange apps and like one or the other like Bitcoin wallet that I have on my phone. But like it's not making up any significant percentage of my portfolio that I have stored on there. And like activity wise, like I think I've once triggered a transaction on my phone, but that's about it. I'm kind of like, I'm personally pretty bullish on crypto mobile as sort of a, distribution vehicle. And like I think some of the applications there are probably not going to be what natively interest me because it's much more consumer than like DeFi focused. But I still think it's kind of prudent to stay in the loop what's happening on there. So yeah, maybe over the next few weeks I'll be able to give a little review of the Solana phone. All right, we are almost at the hour. Do you guys have any other topics you'd like to talk about? Like any other thing that is occupying your mind in the markets right now?
Good question, actually. I mean, I entered a little bit late to the interview, so was just curious, Max, what are you excited about the most for the rest of the of the year? And also, because we are always throwing these ideas around, how long will the cycle last? Did anything happen with regards to your thesis? Did you maybe change your mind on a couple of things due to some recent events, or is it still the same?
I still say it's pretty much the same as last week. Sentiment has obviously improved at least slightly versus 1 week ago. Like, gun to my head, if I had to give probabilities, I would maybe give it 25 to 30% that the crypto cycle is over, and 70 to 75% that it is not. And in terms of cycle top timing, I'd say it's a roughly similar distribution. I'd probably say it's like 70 to maybe 60% odds that we will peak in around October, November, December, so like within Q4, and let's say a 30 to 40% chance that we will see an extended cycle into 2026. I think if you look at the sentiment on like the trading part of crypto Twitter, there are a couple of voices who have become very skeptical regarding the cycle top recently. I think Ansem, he's one of the ones who's calling that it's more likely than not that we have topped. But some of the other traders who have been like bullish from years ago still think that the cycle top is not in, but many of them have started de-risking a little bit. And yeah, I mean, if the top is not in, I do think that we are still like much closer to the top than to the bottom, obviously. And in terms of price action, that it makes sense to focus more on the longer tail of assets, but to also be very yeah, active and like paying a lot of attention to taking profits out of these things, because like the higher we go, the more like exponentially upwards we go, I think the lower we will fall. Obviously, like this stuff always gets retraced back. So like I'd be very, very active and like cautious regarding taking profits. I don't think that, even though we've seen like some actually good projects with really great products, like I've mentioned them again and again, but like Hyperliquid, Ethena, Pendle, and like a bunch of other stuff on the DeFi side, I'm very confident that if the cycle is not over, we will reach price levels where the pricing is just detached from the underlying value, and also that out of these quality projects, we will see pretty tough drawdowns over the next couple of years if we peak exponentially. I think if this cycle is extended, it is just much more likely that Bitcoin will stay in the lead and creep up higher and higher. That would also be reflected in BTCD. Like, I don't think that BTCD will reach another high this cycle. Like, I'd be quite surprised by that. But obviously, if Bitcoin takes the lead, it's very unlikely that we will break the prior lows of BTCD. Yeah, in terms of directional exposure, pretty much unchanged since last week. What I'm personally excited about is a couple of launches in the Hyperliquid ecosystem. Like think Liminal, Hyperbeat, a bunch of stuff there. It's just not necessarily something super new, but I mean it's the ecosystem to be active in right now. So that's one thing, and the other thing is probably prediction markets. So I was very active around the election time last year on Polymarket and took a bunch of bets there. Haven't been playing around with them ever since, but since we've seen a little bit of a prediction market revival season, and like generally, I'm pretty bullish on prediction markets as a meta. I'll definitely try and play around with a few more. Also, with the implicit or explicit expectation of farming airdrops there. Anything you're excited about, either one of you?
So to answer the initial question, no, it hasn't changed. I think end of the year is still where, like Q4 is still probably where most of the action will be. I definitely think we are very close to the cycle top. And my main assumption, which is why it doesn't feel like it, is with the assumption that the price dynamic will have similarity to previous cycles, the majority of the upside and price action will happen within a time span of 2 to 3 weeks. That could start tomorrow, and 3 months in, we have the cycle top, or that could be in November, right? Like that, no one knows. But that is basically at this point, I'm very risk on asset right now. I don't hold much stables or anything, but that is essentially the last thing I'm looking for. Like when I have the feeling that we are in those 2-3 weeks where everything goes ballistic, all the mainstream media writes about it again. We have a runner from 0 to 1 billion within 2 weeks or something crazy like that. I think it's time to go risk off again and farm some USDC yield and peace or whatever. By the way, I didn't comment much on the Hyperliquid USDH conversation and all the proposals, but I think that's extremely interesting, and I'm following that closely as well.
Amazing.
Nice.
Then I think we covered everything for this week.
Yep, I think that was quite a good whiff of topics we've had today. Was great talking, guys, and see you again next week.
Appreciate it.
See you again.
Ciao, ciao.
Appreciate it. Bye-bye.